Friends, today I would like to talk about one asset class which has been ignored for the last 2 years. Yes, I am talking about pure debt investment. As you know, debt investment is instrumental in investors' asset allocation. And here, uh, the last year, what has happened is in April 2023, Finance Ministry has taken away the indexation benefit which was available for debt funds. From April 2023, the pure debt mutual funds are classified as any other asset classes. So what happened is that the taxation remained the same, either if it is for pure debt funds or market-linked debentures, NCDs, fixed deposits, all are classified under one umbrella. So investors have not allocated to debt because of this. But I would like to provide you an important update where, as you know, in fixed deposits or even in NCDs, whenever the interest is paid, the TDS will get cut. In FD, even at the time of accrual, your interest will get deducted as TDS, even before maturity. Unlike in debt mutual funds, only at the time of withdrawal, you will be taxed. So that is a great advantage because you get those option to have that reinvestment opportunity which was not available in other debt funds is very much available in the debt mutual funds because you can continue to hold to get the accrual interest on a daily basis. And one more important thing is that, as you know, the bond prices and interest rates moves inversely. When the interest rate goes down, bond prices go up, and when interest rate goes up, bond prices moves down. That is why you can always see the RBI policy makes an interesting case for debt investments. So, as our economy is transitioning from 4 trillion to 5 trillion to 6 trillion like that, eventually our interest rates will come down. So, these are all wonderful opportunities for investors to lock in their yields at a long-term debt funds, something like 10-year government securities, gilt funds, Nivesh Lakshya, which has got 30-year maturity like that. But also be cognizant that in case if the interest rate goes up, that will also have a mark-to-market blowdown, but we can always tactically allocate that. And the biggest beneficiary in the debt market in recent times is the alternate investment. So when coming to debt, it is the balance sheet of the corporates which is very, very important. And you would have noticed that in the last 12 to 18 months, our corporate balance sheets are deleveraging, which means that they are not taking loans. They are always also repaying their debts, which means that our company's balance sheet are becoming more strength. And we have got more than 9,000 NBFCs operated in the capital markets, which provides the NCDs, market-linked products to the investors with regular cash flow and other things. And alternate investment funds has got some very interesting offerings in the debt space. Let me touch upon that. Basically, they have 4 major categories in the alternate space, which is performing credit, then special situations oriented funds, venture debts, and also distressed assets. I would like to brief upon this performing credit, which is basically a mid-market companies which are looking for growth capital and which has got good balance sheet, and where those companies which are not being serviced by banks are coming into the alternate investment funds to raise capital. Because some of the NBFCs and banks could not lend due to regulatory and capital considerations. That can be very much envisaged by alternate funds, which gives very good yield. In fact, you will see the yields in the alternate debt space ranging from 12 to 18% on different categories. And this space is becoming much bigger, and many of the family offices, ultra HNIs, corporate institutional investors invest in it. Retail investors could not participate because of their high ticket size of 1 crore, which they can always participate by becoming an accredited investor so that the ticket size can come down as low as 25 lakhs. And there are many interesting companies which are offering this type of products and which gives a regular cash flow to the investors and which also provides them a good asset allocation mix in their investment portfolio. So I'll be more than happy to assist you in planning your investments, especially in those alternate investments which are doing well, and our companies are doing well, our economy is doing well, and corporate is also deleveraging. So investors can definitely consider these type of investments also for a good product mix, and also which is not available in the capital markets, which these investments are in the alternate space. So please don't ignore debt as a pure asset class. I know due to the taxation, many people getting into this hybrid category by having debt also into that, which could be a multi-asset or a equity balance advantage fund or conservative hybrid like that. But please do look at debt also. It can also give you portfolio stability as well as regular cash flow, as well as a good yield, which can be good to your portfolio in the medium to long term. Thank you very much. We will connect with you for an individual analysis on your portfolio. Thank you.